It is the week of November 24th, 2025. I'm Tyler Sherven, and I'm with our co-host CJ Gettelfinger and our special guest Lucas Nilsson. Welcome to today's installment of the Weekly Sift Stack.
Gonna have a really great episode for us today, Tyler. We're joined by Lucas. We'll get into that in just a minute. He's gonna shed some great light on our stock of the week, which we'll be going over this week is gonna be Oracle. And then Tyler, I think we've got a lot of great headlines to catch up on. A couple about Meta. They've been filing a couple more problems. Leaning back to what we were talking about last week, are they actually a drug? And then everybody's favorite sequel to the famous Broadway play Wicked just hit the screens, and we've seen some really good earnings there. So should be a great episode. We got a lot to cover.
All right, let's take it away with the index's performance year to date as of Friday, November 21st, 2025, market close. So we're still seeing the S&P 500 up for the year with dividends reinvested 13.56%. We did see a drop of about roughly 1.9% over the last week. And as well, we saw a drop in the NASDAQ, came down about 2.7%. And that's for the third straight negative week. Other good news is that we are seeing the bond market do pretty well with these adverse conditions that we saw last week. The Bloomberg U.S. Aggregate Bond Index is up 7.05% year to date and stayed steady throughout last week, being up about 0.45%. Now, most notably for all the cryptocurrencies R's out there, we're trying to keep up with you here. So Bitcoin is now down 11.05% year to date. Had a drop of about 12% last week. So the biggest crypto asset erased nearly $800 billion in value since its October peak, almost as much as the Bills Stadium. So wiping out all of its gains for 2025. What's driving the rout is a couple of things, right? We're seeing a triple whammy of macro nerves, market rotation, and some good old-fashioned leverage. So Wall Street is sweating a bit over the supposed AI bubble, and when tech gets a little bit shaky, the Bitcoin gets punched in the face first. Add in a little bit of that Fed uncertainty, which is also impacting the S&P 500 and the NASDAQ. Investors are going to shift away a bit more from those juicy assets to the more defensive, adding into that sector rotation that we're seeing. Zooming out, though, Bitcoin corrections of about 20% plus, these happen regularly during the bull runs, and they're largely just temporary headwinds and not trend breakers.
I do just want to pick up on two things in there real quick. You know, for all those conservative investors out here who have a pretty high allocation to bonds, 7% with just about a month left in the year, that's a great year. And then lastly, with Bitcoin, I know that last week it flirted with some of those April lows, touched, in about the upper 70,000 range, and then has returned about 10% since there. So we'll see if it keeps falling off. I know that Lucas is not the hugest advocate of Bitcoin, so we won't get his opinion out there for any of you listeners who are bullish on Bitcoin. We're not going to, we'll keep him tamed down. We'll appreciate it, Tyler. So let's slide right into it, all right? Let's keep up with some of the trendiest names. I know we've been talking about a lot of tech companies lately, so why not? We'll just keep it rolling, talk about Oracle this week. So without any further ado, Lucas has been sitting there kind of patiently waiting.
He's ready.
Lucas Nilsson, for everybody, ladies and gentlemen, he has actually been referred to as the Warren Buffett of the 21st century. So definitely in for a great treat for sure today. And Lucas, I know you're from the Nashville area. So Oracle has also announced plans to relocate, move those headquarters to Nashville. So how about you take just a minute to give our listeners a little bit of a rundown about Oracle and how they make some of their revenue?
Oracle's been in the news quite a bit recently, been a big name in the cloud and AI space. They're started by a famous guy that goes by the name Larry Ellison, no longer the CEO of the company, but still pretty well known in the industry. Company, like you said, moving to Nashville, making a lot of moves recently. The company specializes in developing and marketing database software. They do a lot of cloud computing solutions and enterprise software products. So basically anything across the board in terms of software, AI, cloud computing, things like that. So lots of cool stuff they're doing over there. They've been one of the leaders in the cloud and AI space recently, and they really are looking to continue riding that wave into 2026 and beyond.
Perfect. Appreciate it, Lucas. Now I got a better understanding of what that actually means and how they actually operate. So As we go into it, let's go ahead and get it started off with something that I think you'll be probably not the biggest fan of, but their debt. So let's shed some light on their debt. So Oracle's current balance sheet shows roughly 105 billion in debt, with reports projecting to add another 38 billion by the end of this month. So that new debt that they're going to be leveraging is 23 billion towards a data center in Texas, and then the other 15 billion towards a data center project in Wisconsin. So after those two moves, that's going to bring Oracle's total debt to over 150 billion. So let's help put that into perspective just a little bit. So I know over the past few weeks, two of the companies we've been talking about, NVIDIA and Meta, two of the big Mag 7 companies. So let's compare them as a benchmark for Oracle. Tyler, I'm going to call on you real quick. Do you mind to explain to our listeners what the debt to equity ratio is and what it means?
Hey, of course, CJ. I know debt is a scary word for a lot of folks out there, but the debt to equity ratio is a figure that compares a company's total liabilities to its total shareholders' equity. This reveals how much debt is used to finance its assets. A higher ratio, that's going to indicate that a company relies more on borrowing, which can signal higher risk, while a lower ratio suggests more funding comes from equity, indicating less dependence on debt. So overall, this is a ratio, helps kind of take the scariness out of debt.
Perfect. Appreciate it, Tyler. Let's set the stage here. Let's start with NVIDIA. Largest market cap there is. NVIDIA's debt to equity ratio is 11%. So typically it may depend on what industry you're looking at, things of that nature, but you usually want something lower than about 50%. That's usually a pretty good fundamental basis. So NVIDIA, 11%, doing really, really good there. Let's move on to Meta. Meta's debt to equity ratio, 26%. So a little bit higher, but still good, right? We're still in that benchmark of probably outperforming a lot of its peers and competition. So NVIDIA and Meta both performing really well there. Now let's look at Oracle. Any guesses? Any guesses as to their debt to equity ratio, Tyler?
I'm going to take a guess. I got a feeling that it might be a little bit higher than the U.S. federal government. I'm going to go at 400%.
Even higher, 436% as it stands today. And by the end of November, when the new data centers go through, that will put them at estimates of over 500% debt to equity.
They might need some Doge.
So some Doge. They may need some Doge. They may need to get that a little bit under control. So as we look at that, Lucas, you want to kind of shed some light as to what that actually means and why those numbers are so staggering and what that may mean for an investor, what they may need to be looking at?
Yeah, so debt, it can have a variety of uses for a company. There's a lot of pros and cons when it comes to debt. Oracle recently, there's been a lot of controversy about some of its debt struggles, the things that it's been using a lot of its debt for. One thing I will note is back on September 10th of this year, the company actually released earnings. And what was interesting about this report, the stock jumped 40% in one single trading day after this report was released. This was actually the highest jump for Oracle stock in over 30 years. So that was really interesting. One of the primary reasons really for this jump was due to the fact that the company is now expected to have a pretty insane amount of future contracted revenue. This is basically like pent up orders for the company into the future. What was interesting about this news is that the contracted revenue is now up to $455 billion so far this year. That's up 359% year over year from their earnings report back in 2024. The analysts were projecting just $180 billion in contracted revenue for this report. So that's a pretty insane jump. So analysts were pretty shocked by this report, of course, and the stock actually jumped over 40% in one day. So pretty amazing stuff, and definitely surprising to see out of Oracle, considering their size. You know, they're already one of the leaders in the space. So definitely will be interesting to see in the future how they'll be able to follow through on those contracted revenue contracts. So pretty cool.
A lot of big jumps there, Lucas.
Oh, yeah, definitely. Especially for a company of its size, you just really don't see that a lot in the space. So pretty cool. What's interesting is, you know, in order to meet these obligations, Oracle doesn't actually currently have the capacity to take on a lot of this order flow. So what they're going to need to do is really double down on their capacity. They're going to need to build dozens of data centers and secure tons of energy contracts and GPUs from companies like we were just talking about, NVIDIA. Those are expensive. Those cost a lot of money. So this has really caused a lot of concerns for a lot of debt and equity investors in Oracle. They're actually going to need to rapidly increase their spending over the next few years in the short term. This is with money they do not have. We just talked about how the company is already, deeply, deeply in debt. They've been spending money on a lot of different things, and they're going to have to spend even more money over the next coming years. And so this is obviously really concerning both for the debt and equity investors. Are they going to be able to secure this much capital to make these moves? That remains to be seen. Definitely a lot going on with Oracle in terms of their debt and their spending, but we'll definitely keep an eye on that in the future. One thing that's interesting about Oracle is free cash flow, which a lot of companies use to finance future operations, things like that. It's already turned negative so far this year. Capital expenditures, or CapEx is what investors like to call it. It's now expected to hit $35 billion in fiscal year 2026. This is higher than analysts' initial expectations of 25 billion for 2026. So, huge jump there. They're spending tons and tons of money, tens of billions of dollars on investments into their infrastructure and their overall capacity. Definitely a lot of big moves there, and we'll be watching that. And as CJ mentioned earlier, Oracle is already on a significant amount of debt. And these new capital expenditure plans, they're estimated to push the debt level of Oracle to over $300 billion by 2028. So that's a really significant number, really, for any company of any size. Right now, the largest or most indebted company in the world is Ford Motor Company. They're sitting at about $162 billion worth of debt. That would push Oracle to almost double the most indebted company in the entire world and US. So that's obviously a little bit concerning. Will the company be able to follow through on these obligations? That remains to be seen. So definitely something we're watching with a company this size.
So I think you brought up a lot of great points there. Almost staggering, really, when you think about it, for a company of that size, for that amount of debt, for those type of ratios that you're looking at. That's something that you may see from a company with a market cap of, maybe a mid cap, a small cap, those sort of things. Not necessarily a large cap already pushing its way into the mega cap space. So definitely a lot to consider, a lot to keep your eye on. I really do think that kind of falls into, I don't like to necessarily say it, but a little bit of that speculation of the AI bubble, right? This is kind of a company that when you look at how it's leveraged, they are probably one that's the most susceptible to, if there is any type of bubble, any type of pop, you could definitely see them falling pretty fast, pretty hard. Not speculating on that, how that may play out, but sometimes those numbers don't lie.
Well, thankfully, we got a Nashville guy taking care and watching a Nashville company. That's what you need.
It is what you need. So let's switch roles just a little bit. Let's kind of make a halfway of a pivot and look into their primary business structure. Let's get away from some of the debt, but let's actually look into what they do. And Tyler, I'll pass this one back over to you again. Lucas, I know you kind of expanded on this at the very beginning, but for those who are not really sure, I know you've probably heard the words cloud company. Well, Tyler, what does that actually mean?
Cloud company. Everybody hears it. Everybody uses it. A cloud company, this is a business that is providing computing services over the internet, what a lot of folks just refer to as the cloud. So instead of through physical hardware you own, think of it like renting powerful computers, storage, software, or infrastructure from somebody else. Traditional computing is a lot like owning your own kitchen, but cloud computing is like DoorDash or eating out. You don't own the equipment, you're just accessing the service.
That sheds some light, DoorDash doesn't sound like a bad option then.
You might have to get out. You might have to eat out more with, considering how good the cloud computing is.
See, it's kind of one of those, what's the win-loss ratio? Or that's not the right way to put it. What's the pros and cons, right? I mean, you may pay a little bit more, but the comfort, comfort of getting that food delivered, sitting on the couch.
There's always somebody out there that can cook better than me. That's the way I think about it.
It's true. That's true. I see Lucas getting frustrated over there. It's not built into the budget. So as we kind of segue of that cloud company, right, thinking of a company as Tyler described it, so that's what Oracle is based off of. That's what their claim to fame is. That's their main business model. Well, how big actually are they in their own business? So there's four big clouds: Amazon, Microsoft, Google, and Oracle. What we want to do, though, is kind of look at that market share. Let's look at the market share respectively for each of those big four. Amazon leads the way with AWS 32, 33%. So they take up about a third of the market share in the cloud space. Microsoft comes in at second, around 23%. Google is third at about 12%. And Oracle is in fourth at only 3%. So for a company that's got a lot of this hype that we've been talking about, a lot of things that Lucas was just talking about, a lot of back-ordered flows, they still only have about 3% market share in their own industry. So what do those forward-looking market share projections look like? Well, currently as they are, they're not quite as great as you would think. Projections show that over the next 5 to 10 years, Oracle may struggle to even break into the double digits of that market share for the cloud computing. So just another thing for all you investors to kind of keep in the back of your mind there. And Lucas, I'm going to pass it back over to you for one last thing to finish up. I know we've brought up quite a few potential red flags, and I don't want anyone to necessarily think that we're just trying to beat down maliciously on Oracle. But when you look at it from a fundamental basis like we do, that's kind of what you have to do. And so if that's the case, though, if we keep kind of talking about some of these red flags, a few issues we found, well, then why is the stock up 20% this year? Lucas, you want to kind of elaborate on that?
What's interesting about Oracle, we talked a lot about that huge $455 billion figure with contracted revenue. One thing I will note is just one of those customers makes up $317 billion of that $455 billion. So a significant amount of that contracted revenue. And that company happens to be OpenAI. So I'm sure you've heard of OpenAI. They've been in the news a lot recently. The market usually, whenever they announce deals with other companies, there's usually a lot of positive sentiment around deals with OpenAI. So we've seen time and time again with companies like Amazon, Microsoft, Google, whenever there's a deal with OpenAI, we see those stocks jump 5, 10+% in one single trading day. Lots of big moves anytime OpenAI makes a deal. And as you can see with Oracle, same case here, huge percentage of that contracted revenue is coming from just OpenAI. So definitely a big player there. There's lots of big names, obviously, making deals with them. And we've seen lots of positive reactions overall from the market whenever these deals take place. However, it is a little bit uncertain on whether OpenAI can follow through on these deals. They're making hundreds of billions of dollars of deals. They haven't been able to follow through on many of these deals yet. They're still a very young company. So a lot remains to be seen with what they'll be able to do with that.
Lucas, well, I appreciate you joining in and giving us some great insight on Oracle today. And I think you summed it up really well right there. Is, you know, there's always going to be the back and forth of, right, Oracle's got a lot of debt, but they've got a lot of projected future earnings and future revenues to be able to pull on. So we're just going to have to sit there and play it out. I think this is definitely going to be an interesting company to look at, you know, maybe 3, 4, 5, 10 years down the road and see how some of this plays out. Those things are going to be very interesting of where we're looking at within the state of the economy, the state of the markets. I think Oracle's definitely going to be one to keep your eyes on. Probably going to be
it's been a
volatile
company
to continue.
around for a very long time. So, you know,
It has.
we'll see how it, you know, 5, 10 years in the future, we got like 30, 40 years looking back. So let's all buckle up, eh?
That's a good point for sure. Well, that kind of wraps up our summary on Oracle. Let us know your thoughts. If you got any feedback, how you feel about Oracle. Are you bearish? Are you bullish? What are your thoughts? Is there something that we may have been overlooking a little bit? But with that, Tyler, I'll pass it back over to you. Like I said, we got a bunch of fun stuff to talk about going on in the news this week.
Oh, yes, sir. So now jumping into first the NVIDIA earnings. Wall Street, as we all saw, treated this like a national holiday, and NVIDIA, Jensen Huang, certainly did not disappoint. Everybody cleared their calendars. I know Lucas was ready. I know CJ was ready, and all of our followers out there were ready. Everybody was hovering over every line of that release, and the company delivered exactly what people were looking for. Revenue passed expectations, margins continued to expand, and the guidance signaled that AI infrastructure spending is still in its early stages. The demand of GPUs have yet to show those signs of cooling, and NVIDIA shows why they are the supplier powering the AI ecosystem. Now, next up, Eli Lilly is joining the $1 trillion club, up there with Elon Musk's $1 trillion compensation package. It feels like day after day I'm saying 1 trillion more and more, and it's kind of starting to freak me out a little bit. But History made. It was made again this week as the first $1 trillion pharma giant arrived. And this is a milestone that we typically see reserved for big tech, such as NVIDIA and who knows, maybe Oracle. So what fueled this company's growth? There's been weight loss demand that's been going through the roof in the United States and across the world. And this is, of course, reshaping healthcare, changing consumer behavior, and ultimately changing the stock market. So we have two GLP-1 drugs that are leading the way for the company. We have the weight loss injection drug, Zepbound, and the diabetes drug, Mounjaro, that have been leading their respective markets and have ultimately been leading toward that $1 trillion valuation that now sits there for Eli Lilly. Now, next up, CJ Lucas. Is Meta a drug?
It's got to be.
I think so.
Well, it seems that there's some people out there that may agree with you. We have a new legal filing coming out just this past Friday claiming that Meta tapped the brakes on company research that is showing that perhaps users who quit Facebook may have lower levels of anxiety and depression. Now, this is a claim that Meta heavily disputes, with Andy Stone, Meta representative, saying that this is misleading and cherry-picked. But at the end of the day, this filing is part of a broader wave of lawsuits targeting the psychological impact of social media platforms that includes not just Meta, but Google, YouTube, Snap, and TikTok. Unfortunately, a good amount of platforms that we ourselves are on. So feels like we're giving a little bit of big tobacco energy here.
Tyler, let me ad-lib a little bit on this.
Let's hear it.
One, just a personal note. Like, Kira and myself the past few weeks have just been feeling this to the 1,000th degree of we're in the midst of wedding planning. We're always on our phones, always on computers, technology 24/7. And we both have just sat there and looked at each other multiple times in the past few weeks and are like, once this is all over, can we just throw our phones away? Can we just get rid of them, get off of them?
I totally feel you guys.
I think that's such a good point. I mean, that study, I would love to see deeper into that and what that actually shows. And then the second thing, did either of you two see the Theo Vaughn, Matthew McConaughey podcast? Have either of you seen this? You know what I'm talking about?
Right? About like, did he ask like what it means to be a man? Was that it? Or am I thinking of the wrong one?
Did you see the part where they were talking about like the dopamine hit of the social media and how it's changed in life? Have you seen this?
I haven't seen that section of it yet, no.
It was very interesting, and I honestly think that it goes in line with this perfectly. So Matthew McConaughey was expanding upon an old study as well, talking about how in life the peak dopamine hit used to be like hitting that, climbing the mountain, getting to the top of the mountain, being at the view. Right, that used to be the peak dopamine for everybody. But he said it's now changed, that it's no longer, he compared it to like football. He said that it's no longer you actually playing the game and running into the end zone. It's seeing yourself on Instagram, watching the highlight of you run into the end zone. And it's no longer you actually being in the moment. And that's what the study showed, that it's no longer the actual moment you're living in. It's the recording of the moment. It's the technology of the moment. It's very interesting. It's very scary, honestly. Kind of sad.
Are you telling me that my biggest dopamine hit from doing this podcast right now is going to be me
100%.
Watching it and not us doing it 100%. Right here in the moment?
I'm going to have to double down on that and say mine too.
Yeah.
I mean, it is. It's weird. I don't know how I feel about it, but I think it's true.
Well, I'm definitely going to be getting ready for that dopamine rush when I see us up on the YouTube or whatever. Well, next up, and again, CJ, I know this is a big film for you and maybe you too, Lucas.
Yep.
Wicked Part 2 has returned. Broadway's blockbuster. Right? So this movie certainly has not disappointed. It delivered a weekend that Hollywood has been starving for, pulling in $150 million across the United States, the second biggest opening weekend of 2025. And a record for a Broadway adaptation. Doesn't get better than this for the Broadways. So now families, they showed up in droves. I know that you and your family, your guys are going to be coming up in the drove too, right? So
hey, I know we were talking about it earlier. I bought my tickets Wednesday, 5:15. I'm there.
And well, hopefully that dopamine rush will come in for you too. So
Oh, it will.
Then instead,
I'm gonna be singing too.
You're gonna be singing
I'm
too.
gonna be singing in my seat.
Hey,
I will. This is growing up. Little fun fact for you. This was my mom's favorite Broadway play. She had the Wicked CD in her car everywhere I'd go for like 5 years. I know every word. I know every word.
you know every word. All right. Well, the big thing
Don't
about
fact
it.
check that.
Well, what did you say, CJ?
I said don't fact check that. I may not know every
Oh,
word.
I'm gonna fact check it. I will. And this franchise, of course, as just CJ just showed, it's showing that it still has the cultural gravity. And in a year full of box office uncertainty, Wicked has stood up, sang the high C, loud and proud, and said that the theater kids are still running this town. Sorry, CJ. It looks like the theater kids are taking over from the D1 basketball folks.
Oof. We'll see about that one. But hey, I'm here for it. I'm here for it.
All right. Next up, the Fed. Are we flying blind into December? So, peak 2025 fashion, the Bureau of Labor Statistics canceled the October Consumer Price Index release due to the government showdown. This has left the Federal Reserve without its most important inflation data point ahead of the Federal Open Market Committee meeting. Now, New York Fed President John Williams has added a little bit more fuel to the speculation, saying that there is room for adjustments. Now, this is typically Fed speak for we're not done cutting yet. So, according to the CME Fed Watch, following these comments, the market priced in 73% odds of a December rate cut. And this is from the depths of 42% last week. And now, CJ, we've been talking about this. This has been seesawing back and forth. And thankfully, we're back up to 70% plus. Markets are feeling more certain. And, you know, at the end of the day, we know that markets may not love uncertainty, but their first love that they just simply cannot let go is that word cut. So we'll wait and see how this has an impact on the markets. The bond markets seem to be reacting positively and have already been preemptively performing positively to this news.
Yeah, and I think that's a good point as well as we look back at the stock we were just talking about, Oracle. I mean, that's clearly going to make them happy as they're looking to leverage new debt. So you can start to see how that really does play a factor and has a lot of importance for a lot of these companies. A mega cap, 600 billion market cap for Oracle, how those rate cuts can really make a big difference for them and their debt. So we'll see how that plays out. But yeah, I definitely think that you're getting a little bit more positivity. I think you've seen that swing in the past 4 or 5 days for sure.
Yippers. And then that leads us into the poll question of the week. Will the Federal Reserve cut the rates on December 10th? First answer is yes, we need the cut to continue the growth. Second answer is no, the current state of the economy doesn't warrant a cut. Third answer, a cut. We need a bump back up. And then the fourth answer is who the heck knows at this point? So all you folks out there, please let us know your answer. And if you have a deeper answer, you want to expand on the commentary, please email that to us.
Lucas, let's hear from you. Let's hear from you. Special guest. What do you think? What's your response on this week's poll question?
I myself am hoping for a rate cut. We're seeing the unemployment rate tick up a little bit. That's obviously been a concern for the Fed, especially over the last few months. We saw that pivot back around in the July, late summertime. So I'm thinking we're getting a cut here.
Next up, though, for the poll question, what should the government do with $300 billion in 2025 tariff revenue? So this was the question with last week. Thank you guys all for responding to this. The top answer by far, with 67% voting for this, is use it to cut the deficit. Now, Lucas, what do you think about that from our followers?
That's an interesting poll. Glad you guys took the time to do that just to get the overall sentiment of what the viewers are thinking. I think I'm siding mostly with the viewers on this one. I think a big part of what the DOGE program was marketed as, something to close that budget, help tame inflation, get us back to where we were around the 90s when we had that balanced budget, things were going good. So I think we should follow through on what the program was marketed as and just close that deficit. We don't need to give out checks. Inflation's a little higher than where we would like to see it now. So I'm hoping that we can use that to cut the deficit.
Now, speaking of the Doge, I got it right this time. Did you hear that it's no longer going to exist? Doge is dead?
I have not. That's the first I'm hearing of this. This just happens. Is this groundbreaking news as we're recording?
It looks like it sure is. Now I'm looking at Newsweek by Hugh Cameron. The Department of Government Efficiency has been quietly dissolved ahead of schedule, having achieved, even by its own estimates, only a fraction of the savings it initially sought. So we'll be still waiting to see. There's more. I'm sure there's going to be more news coming out about this, but we'll be waiting to see how
Tyler,
that materializes.
that doesn't mean my Dogecoin is getting delisted, does it?
I don't know, man. I mean, who knows with the way crypto's going? But I don't know, man. But I'll be wishing the best for you on that crypto though.
Tyler, let me go ahead and finish this off with the motivational quote for the week. Finish this off on a strong note. This quote's from Larry Ellison, founder of Oracle. Your work is going to fill a large part of your life, and the only way to be truly satisfied is to do what you believe is great work. And the only way to do great work is to love what you do. I love it. I love it. I mean, we know that we're going to have some long hours, some long days, those sort of things. But if you can do what you love, it's going to make it, that much more impactful, that much more meaningful. And I love that quote. I'm definitely getting to do that here with all of you all and look forward to continuing that trend. So as always, appreciate everybody watching. Appreciate everybody joining in this week. Lucas, it's been an absolute pleasure. We're going to have to get you back on frequently. We'll maybe review a company. Any picks as to what you want to review next time, maybe?
Oh, I've got a list. I've got a few up my alley, so we'll take a look, and I'll be happy to be back on anytime. I'm glad to join you guys.
Well, absolutely. We can't wait to have you back on. And for any listeners, specifically those Vikings fans out there, Lucas, man, Packers absolutely put it on him. So we're going to end it there. And y'all have a great rest of your week.
This material is for educational purposes only and is not intended to provide specific investment advice or recommendations. Investing involves risk, including loss of principal.